Good morning, traders, and happy Friday. It's 8:03 a.m. Chicago time on the 6th of May, 2022. It is non-farm payroll day today. We just had the report approximately a half hour ago. The unemployment and non-farm payroll for the U.S. came in strong, surprisingly, came in at 428,000 versus 415 this morning, and that's where we start. This is episode number 2228. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Digging into where the market's at this morning, we see that the overall risk sentiment is mild risk off. Europe kind of catching up to yesterday's sell-off. Yesterday's sell-off in the U.S. Japan was relatively strong, finished relatively strong, mildly strong this morning. You can see crude continues to pop higher. Crude got as high as 111 overnight and has pulled back. QCL high of 110.85. Low 107.24, pretty decent range there. Currently up 68 basis points. The indices are off, especially the NASDAQ, and again, Europe is off. So what do we have going on here? This morning we had several reports that were very important, especially out of Europe. We had comments out of Bosch. Bosch came out and said Bosch is a very large manufacturer. And said that there are some recessionary pressures and are warning of recession-type performance. Same with Adidas. We did get Cigna, Brookfield, partners, Enbridge, Goodyear, TELUS, Under Armour, and others this morning. And then what's ahead is that we have a lot of Fed speakers today. Fed's Williams here in about 10 minutes. And then later on, we have Fed's Bostic, Waller, Daly. Luckily, Waller and Daly happen after the market closed. This is kind of a typical thing where Jeremy Powell comes out and says one thing, and then you have these Fed speakers kind of, how should I say, fine-tuning the message, going out there and fine-tuning the message, because it looks more and more like it's true that the Fed is just one big propaganda machine. But that's where we stand this morning. Just pay attention to those Fed speakers because the market sure is. And be aware, make sure your news feed is turned on or whatever. The real big thing to worry about is still the China COVID lockdown. I mean, the Adidas basically came out and said, look, we're getting hammered by the fact that we can't get product. And China is not letting up on its zero tolerance policy. So it imposed some more lockdowns today as 2 more cases were found. It is enforcing wide testing, which will probably reveal more cases. And honestly, it just seems like this is on the brink of insanity, the amount of effort that's being made to control this virus for which we already have a solution now. I get it before the vaccines, but now it's just like, it just doesn't make any sense. I feel like this is a political tool now for China. Anyway, it's harming its own economy, but it's harming everybody else as well. The current state of the ES is balanced. The auction condition is balanced. We have relatively heavy volume. Now, we did have non-farm payroll, so that's going to add to the volume after the 7:30 Central, 8:30 Eastern release. Volume at 310,000 is higher than what's expected. The overnight inventory is generally short, 77%. It's not really an excess. The range is 44.5 points, which is where we have been for the last few sessions, around 40 to 45 points. The point of control shifted quite a bit lower, 41.30 from where we were the overnight session before. Yesterday's settlement in the ES had about more than 150 point swing down. 150 point swing down, and it's just the market really took back, and I'm sure you've heard all about this. It took back the rally after the euphoric Fed release on Wednesday, and this is likely to continue driving through the 4100, and we are likely to achieve that 4050 and then 4016 down below. This looks like a pretty deep pullback coming in the structure. We'll look at that in a moment. Yesterday, just a quick review. I talked about the expectation that we are likely to get back down below the 4200. Expected it to go and test this 14 at least, and then really, I'm looking for it to get back down into the zone right here, below 4,200. And it did. Yesterday ended up pushing to actually 4,100. It was really, selling was unabated. But here's what we had yesterday in our review. Just 1 second. It's such a noisy chart yesterday, such a busy chart. Here it is. Hello, everyone. So yesterday we had what was expected, an open auction in range. You see that right there? And then we had a pretty strong drive down. We had a pretty strong drive down. There's pretty heavy volume right from the get-go. We had strong separation between not only the full session, but the RTH mid and VWAP on the way down, making it very much a trend day type. You can see that very immediately, before even the IB was created, this thing had run away from its open and has, and the open really is a couple ticks below the top of the range. And then it just absolutely ran away and moved not only into that 42.14, it actually moved right back down into the prior day's range. So we came right back into this balance range, right into balance, to the 4170. So we bounced off of the 4170. We pulled back to the IB. And I don't know about you, but there was quite a bit of structure. But yesterday was mainly a scalpy trade. It was pretty much a scalpy trade. But we did get quite a bit of structure. You can see I drew these boxes on the platform here to trade against, and we ended up pushing all the way below the 4100 here with a low of 40.99 before seeing a bounce. But we still have these multiple boxes here that we're trading off of. The over-under remains this 41-45 area is just really big. We need to keep an eye on that as an immediate kind of line in the sand. In fact, the non-farm payrolls released this morning. If you're with Convergent and Head Trader channel, you'll see that I shorted 41.44.5. Let me see what I posted. 41.44.75 at 7:31 and 20 seconds Central Time. That's off of the non-farm payrolls for a very, very quick rundown to 41.35 and a bounce. And I had put in there that I'm expecting this thing to push to the SOC for the non-farm payrolls, which is at 41.28, and it ended up squeezing all the way down to 41.08, but not before pushing into 41.50. So I was not part of the push lower. But overall, we are getting past this high volume area, and we are sticking around down here. This is quite weak. So yesterday, kind of interesting structure. It's didn't give us the normal setups we'd want to see. Today, you could see that we opened up, really nice reversal here. Today we opened up and pushed a little bit higher, but overall we've created a very balanced profile. We've held the low. The overnight low is 41.08, which was just put in. Yesterday's low is 40.99 1/4. We have a balanced profile. We have the point of control on top of mid, on top of VWAP, full session VWAP, and we're staying well offered below yesterday's settlement. It's opening quite weak. We're not letting go of yesterday's lower distribution. We're coming in this morning, despite the fact that Asia traded. News came out of India again, Australia, and so on. Yet we couldn't really catch a bid and push through and get above 41.75, which is another key area. So 41.45 to 41.75, murky area above there. It starts to get bid into 42.14, and it's not able to do that. To me, again, I'm going to mark it the same way I marked yesterday, which is it is very likely to continue lower. So that's what I'm looking at here. Let me reset this. That's what I'm looking at here. The key area down below is, again, 40.50, the mid-century, and then 40.16, I believe, is the next big test area below. I'm still on that narrative. So for a moment, let's take a look at the big picture. Let's look at Edge Pro X for a minute. Here's what we've got. You know, we rallied. Look at this. Again, I'm going to mark this the same way I did yesterday. See this? Really important right here. This base, I expected us to come back to this base. If we fail the 14, I expected us to get back to this base of about 190, okay, 190, 180. And then below there, we're likely to push to 150, 45, which was really an important area yesterday, important designation for yesterday. And it basically rallied on Wednesday on the FOMC and gave us this really clear excess low from Monday. Monday, we put in a very clear excess low, a very interesting trade there on a higher time frame. We see this as a higher low, looking for a pivot break here, and then looking to get long into that, which would have held us through from this location. It would have held us through for about 130 points or so to the upside. And then we came in, and then as soon as we opened yesterday, we were here. Remember, I drew these flags, and I drew an arrow going down. As soon as we came in, I talked about this. I talked about the flagpole. If you recall, if you were here, I said this has very little structure holding it together. So I expect this thing to drop. Like, imagine a flag coming down a flagpole. It's going to wave its way down, but it's going to come down very fast because there's not much structure there, and that's what happened, plus some. Because not only did it push through the flagpole of the FOMC, the single prints and so on, it actually went through the bulk of the volume from the FOMC, and it rested, and in the low of the FOMC day, almost became resistance, and we're holding beneath it right down here, right? So, and we're holding steady, and this thing is just drooping down. So what's likely to happen here is we're likely to take this excess that's right there, right? So we pushed right into the edge of excess yesterday at 4,100. This excess, again, we have very weak structure right there. You see that? We are likely to continue to test that, okay? If this was an important excess, we should not be here. This makes it so that It's not weak yet, but it's very likely to give in because nothing here says that they are done finding buyers and that buyers have stepped in. Buyers have not stepped in. Another perspective on this is the TPO chart. Let's include yesterday. The TPO chart, and you could see that, let me push this to the side. You could see that we moved right down into this. So we've left behind a whole mountain of resistance. In my opinion, this is very hard to come in today. We're at 41.18, right? We're right here. It's just a lot more work to go and take out the balance that was created right here. Okay, and even more so, the balance that was created up here. So I'm seeing a lot of potential resistance here. Any rallies, I'm going to be looking to get short on structure. So look for a high, pullback, weaker high, starting to break that last low against clear structure. And we'll see what happens. But the expectation is this thing is likely to trickle down and continue to push lower. So this is I'm showing you this in several different ways, but overall this does not look very good. So let's look at the composite for a minute, and then I'll let you go here. Here's the composite chart. Let's compress this. Where are we now? So let's just look at where are we now. Here's where we are. We have this very interesting double bottom at 40.20. This is a big target. This is a weak-ish low right here. We have already taken out this structure. So you can see there was a high here at 4,200, tested from above. We had a rally. We attempted to pull back. We went to 42.65 or whatever, and then we pushed. We made new highs. We broke the 65. The 65 has been in play several times, 65, the 65 area. So that's a 65 area, carry over, and we've kind of poke through it, and now this area has become unimportant, so to speak, and we are pushing below this 4,200 and holding below the 4,200, and the next cutoff is this 40.20, this 40.20 structure right here, and then we get into this gap zone and so on and so forth. So really the number I'm looking for down here is 40.16, the 40.16 area to be tested. And we're well within range. We've got about 100 points to get down there. So as we start to trade, we start to template what's going on here, and I'm not seeing a lot to deal with or a lot of fight here to hold the buyers up. Overall, if you look at what we've done, it really is a push, pull, impulse down, pull back, dead cat bounce, push, pull, and then it looked like a reversal here, right? Almost a double bottom here. This 41.60 area or so, and then we try to push higher, but then fail to do so. This is 46.16, I think, or 46.15, and then we just fail to do so. So these bounces have not had a lot of have not received a lot of support by buyers on the way down. So what we have now is a push, pullback, impulse down, an attempt to reverse, unable to get back up here to the 4,400, and so now we are near the low and we are likely to trickle down. This is what it looks like to me. Obviously anything can happen, but my best guess is that is what we're likely to see. So I was going to do the where are you from today, but there's too much going on. So what are we looking at here for today? The expectation for today is today's expectation, open auction. Again, let me highlight that there's volume up here. There's volume up here and here. Okay? The expectation is responsive buying. I'm expecting the market to respond back to the 4130, 4145. So let's mark that. Let's turn on our stock zones. 4130, 130, 45 above. Oof, really hard writing here. And then I'm looking for it to kind of give in and squeeze that low, give us our overnight stat at 4108, and then open the floodgates to take out the 4100. And once we get the 4100, we start to work ourselves down to 4080, 80, 50, and 16. So these are 40, 16. This is what I'm expecting. Okay, and then those are the next few numbers. But given the range from about 41.30, 45, I'm expecting it to have a hard time getting through the 80 today. It is the weekend. It is non-farm payroll. Strong number today. You know, still a lot of wage pressures, a lot of job pressures. So it's a positive number that may be negative overall on inflation. So, you know, we're looking at probably 80 is likely to cause a stall and give us our daily stat figure of about 54 points, but it could get down into the 50 today before the bounce. That's the key play. The secondary play is that we do push, we open up, we do push the low. We are unable to hold below the 4100. So we poke the 4100, we get back above. Then we use the 4100 area for support and create a pivot point and a squeeze back into the overnight point of control. And this is likely to create some pressure on the sellers back towards the 4200, but we're not likely to get to 4200. I'm looking for it to get back into the 65 here, the 165 before it stalls. That gives us about 65 points of positive range. And it's not likely to push through that, statistically speaking. It's not likely to rally all that much. There's not much impetus here unless news comes in to do this. So the map above 30, 4130, 4145, expecting it to fail there, squeeze to 4100, take out yesterday's low, consolidate, and then work itself down into 4080. And then 4050 is still on deck. 4050 is about where we turned the other day, 4058, 4060, something like that. So we'll take out that low, that swing low we put in on Monday. That's the key idea. So I'm going to be looking for weakness as we open. I'm going to be looking for failed attempts to push higher. If not, if it gets strong and it starts to impulse up and it starts to hold the overnight point of control and squeeze higher through that 4130, 45 area, then I'm looking for it to push through to 65, and that becomes a key target on the upside. Okay, good luck, and I'll catch you on Monday morning. Take care. A lot going on this week. So hopefully you picked up a lot of ideas about structure, volume profiling, and so on, so you can really understand what the auction is. Take care.